In today's edition of Crypto with Your Coffee, I'll be going over Pundi X, the latest DeFi rug pull, and Ethereum network fees. What's going on, guys? Randy here with another crypto video. I make crypto videos 2 times a day, once in the morning covering crypto news, and again in the evening covering altcoin. Make sure to subscribe to the channel, smash the like button. But before I get into today's content, I want to tell you about BlockFi. Get up to $250 of free Bitcoin when you fund your BlockFi account. There are no lockup periods, so you can release your funds anytime you want. Earn up to 8.6% APY on USDC, Bitcoin, ETH, Link, Litecoin. And at the top of the bull run, I'll be cashing out into USDC at 8.6% to live off the interest, as well as buy back in during the bear market. All right, let's get into Pundi X. Pundi X surges 130% in 2 days. What's driving this rally? NPXS is the native token of Pundi X, a cryptocurrency point of sale solution provider. And they've had a massive surge in price over the last 48 hours. In merely 2 days, the price of NPXS rose by more than 130% on Binance, outperforming most major cryptocurrencies on the exchange. Token staking and fewer NPXS tokens. Pundi X is reducing its token supply to a 1,000 to 1 ratio and rebranding the native token from NPXS to PundiX. The rebranding is fueling the overall increase in interest in NPXS, considering that the token has been consolidating for a prolonged period. Additionally, token staking further amplifies the positive effect on the value as it leads to more users to stake NPXS and refrain from selling as the token is locked up, Chia said. As scheduled, NPXS token reduction starts late March, followed by immediately or a few days later token staking. Staking rewards is 100,000 US dollars plus value weekly for 10 weeks. Someone said it's better to call our staking DeFi farming. So yeah, Pundi X DeFi farming is coming. Those are the major factors in this Pundi X pump. It's a coin that has kind of been wavering from the top 100 to the top 300 coins, kind of on this resurgence and rebound. So our next story is Ethereum network in a fee spin. Can the Berlin upgrade save the day? So as we all know, Ethereum has insane gas fees right now. I think that's one thing that's keeping it away from hitting all-time new highs and just surging even further. And one way to combat these fees and kind of take us one step closer to ETH 2.0 is this Berlin upgrade, which contains EIPs aimed at reducing transaction costs. They're saying it may not provide a long-term solution. What is the Berlin upgrade? After months of planning, the Ethereum community recently laid out its implementation timeline for Berlin, with the upgrade slated to go live on the Ethereum mainnet at block 12,244,000 or on April 14th. In this regard, it bears mentioning that a total of 4 Ethereum improvement protocols will be deployed as part of Berlin. So will Berlin really help ease Ether's growing pains? Engine CEO Maxim Blagoff says, "We can't assume that it will have a significant impact on cost per transaction. Deep structural changes will need to be made in order to bring Ethereum in line with user expectations. Newcomers to the NFT market often expect free, instant transactions, and unfortunately, nothing like this will be achievable on the current state of Ethereum. Berlin may be able to ease out gas fees problems temporarily. It will not be able to address the network's long-term scalability issues. Ethereum will need to work on incorporating rollups and other layer 2 scaling solutions such as Polygon in order to provide meaningful and sustainable midterm solutions to its problems with Ethereum 2.0 is rolled out in its entirety." And ETH 2.0, the actual ETH 2.0 is likely not going to be completely finished for another year or more. EIP 1559 and more. So the most anticipated upgrade to the Ethereum network, EIP 1559, is slated to go live sometime in July. The proposal will be packaged along with the London hard fork. and will seek to fix numerous issues with Ethereum's user experience. For starters, it will look to redirect Ethereum's native gas fee to the network itself instead of miners. This fee will then be burned, allowing for a gradual reduction in the total supply pool of ETH. So this is the major upgrade right here that you want to be on the lookout for in July. This is when ETH will more than likely take off, especially if everything's successful. I mean, it's all based on successful upgrades. And in July is probably that time where you're going to see ETH start to run. And don't forget, Ethereum has one of the biggest developer communities in all of crypto. If anyone can make this happen, it would be Ethereum. All right, our last story for the day. Binance Smart Chain's TurtleDex Rugpulls shortly after launch. I mean, what do you expect from something called TurtleDex? I mean, that one's not even the worst one. There's many other cryptocurrencies out there that they pick the craziest names for their projects, and it's hard to take them serious. And they're all not going to be scams. Yesterday, March 19th, Binance Smart Chain file storage project TurtleDex performed a rug pull exit scam coming off of a March 15th pre-sale round that raised 9,000 BNB tokens worth $2.5 million. The team drained those funds from trading pools on BCS native decentralized exchanges PancakeSwap and ApeSwap, converted the liquidity to ETH, and sent the funds to Binance exchange wallets to be sold according to TurtleDex team wallet transactions. The TurtleDex website has gone dark and social channels have been deleted. Some investors pointed out that the project had previously been audited and no severe security issues were identified, prompting a renewed round of criticism about the efficiency of audits. Ironically, according to screenshots, prospective investors had asked the team about the possibility of a rug pull in official channels. The team responded jokingly by saying that it would be impossible as the turtle's arms are too short. Funny stuff there. Turns out that the turtle's arms aren't too short. The past CZ of Binance has been able to track down rug pull exit scams by just stopping trading and investigating the situation a little more. So we'll see what happens. I'll keep you updated on this story with TurtleDex. But one thing to be aware of when you're investing in a coin and there's an anonymous team, that's a huge red flag right there. Anonymous teams, not to say they're always going to rug pull or it's always a scam, but wouldn't you trust a team more if you knew who the owners were, if you knew who started it? Someone's got to be held accountable, and in this situation, they might get off with millions of dollars worth of everyday people's funds. Be on the lookout. Here's your tweet of the day, Glassnode. They said, in bull markets, old coins tend to move more. This increases the relative supply of younger coins in the network. At previous BTC tops, around 50% of the Bitcoin supply was younger than 6 months. We are currently significantly below this level of 36%. And essentially what that means is Bitcoin is changing hands. Hodlers from the 2017 bull run and before have booked unrealized profits. And also at the same time, new hodlers bought these dips and accumulated. So a steady increase from 36% signals a strong bullish sentiment and an upcoming price rally. And also this shows that we're not done yet. We're not even at the 50% mark. Historically, when the top is in for Bitcoin and cryptocurrencies, we're only at 36%. So very bullish tweet here from Glassnode. All right, guys, that's all I have for you today. Again, if you like crypto content twice a day, be sure to smash the like button and follow the channel. And I'll see you guys tonight.